Thanks, everyone. I see some hellos in the chat from South Dakota, Canton, New York, and some other places. So it's fun to know where you come from. So hello, everyone. This is LeanLaw's monthly masterclass. I'm Fred Willerup, CTO of LeanLaw, and Chase. Who are you?
I ask myself that morning every day when I wake up. I run the customer success team here at LeanLaw. So that's support, onboarding, account management is a new one. So, and if you're in the support chat, you'll probably run into me. So,
excellent. We took a break in December. We're starting our masterclasses up again. These are monthly webinars that I think many of you have benefited from, and we certainly have enjoyed doing these. The idea is to dive deep into a section of our product. Today we'll be talking about trust accounting. So we're going to be covering kind of the trust accounting features of the product, all of it in some depth. And we hope this is interactive. So during the presentation, please ask questions, and we will take those during the call, so it becomes a little interactive. And next month we are going to be picking up another topic. Let us know if there's some specific topics you'd like to cover, areas of the product where you feel you need help, and we will adjust the topics accordingly here. I think that's it in terms of just sort of introductions. Chase, did I miss anything?
Nope, I think you pretty well got everything.
Okay, well, the topic is trust accounting, and Chase is going to dive into this. I'm going to pitch in where I can. But this will be the majority of our conversation here. We will reserve some time at the end, 10-15 minutes, hopefully, for some a quick overview of some new product features we've launched and will be launching very soon. So stay tuned for the end here, where I'll be going over some new stuff.
Awesome, thank you, Fred. All right, let's go ahead and get started. So as Fred put it, we are covering trust accounting today, which is definitely no small task. So we're going to zip right along here. And just to get started, there's three main areas that we're going to be focusing on. The setting up a trust account is kind of a back to basics, understanding why we're doing it the way we do it. Billing with trust, so that's going to be your receiving payments. That's going to be paying invoices, paying yourself. That's important. And then last but not least is the trust reporting and reconciliation of those trust accounts. So now I will go ahead and flip this over, and we'll take a look at LeanLaw here as an example and get started. So bear with me as I flip that over.
Maybe not all of you have seen our awesome t-shirts here. I'm just going to go down to our motto here at LeanLaw. Anyway, carry on, Chase.
That motto has definitely started some interesting conversations out and about. I had one gentleman who said, I was wearing the shirt at a breakfast place, and he said, wait a minute, you're not old enough to be an attorney. Is your dad an attorney? And I said, no, I just work with a lot of them. So I think we are good. Fred, are we seeing LeanLaw here?
Yes.
Perfect. You get those questions pulled up as well, so we don't miss out on any of those. There we go. Okay. Cool, so let's get started. So the first topic that we're going to cover is actually the setting up of trust. Now, most of you are already probably familiar with this, but I wanted to come back and do a back to basics, like I said, and take a look at what we're actually doing or what's actually happening, because that's important to understand how the rest of LeanLaw actually works, and what happens when we make a trust payment, make a trust deposit. We want to know where to look in QuickBooks when those things happen. So that's the context there for you. So first thing we're going to do is set up the trust bank account. Now, this is all assuming that you have not set up QuickBooks before, you don't have a bank account set up, nothing. We're starting totally fresh here. Now, the account we're going to be looking at does have things set up, so bear with me there, but suspend your disbelief, and we'll go through this as if this was a totally new account. So to start, we're actually going to be in QuickBooks for this. In QuickBooks, and then go to our chart of accounts. There we go, and that's going to kick me out. That's okay. There we go. Back to the chart of accounts we go. And we're going to be setting up two accounts. The first of which is the actual trust bank account. So we'll go ahead and click new. Make sure that account type is set to bank and change that detail type to trust account. Now, this is important. If you don't set the detail type and the account type correctly on this, LeanLaw won't even see it. So we'll go ahead and call this Masterclass Trust.
So if you have a trust account set up already in QuickBooks and you need to connect in LeanLaw, you do need to check the detail type here. So
Right.
That's a side note.
Yep. QuickBooks offers the ability to set up synced bank accounts. You'll want to make sure that detail type is set, as Fred said. So first is our actual trust bank account. This is where we actually keep the money. Now, the second is the operating account, which should have, even if you haven't set up trust before. That's normally a checking account. So for the sake of showing the full process there, that's bank and then changing the detail type to checking. And last but not least, the third account is the trust liability account. Now, LeanLaw will automatically make this for you if you don't have one set up, but I'm going to do it in QuickBooks just so we know what it actually looks like. To do that, we'll click new, change the account type to other current liabilities, and change the default to, or the detail type, sorry, to other current liabilities. There we go. Save and close. So those are the three accounts that we need for trust accounting: our trust bank account, the operating account, and the liability account. Fred, did I miss anything there?
No, I think keep going.
Okay. So now that we've got those set up in QuickBooks, we can connect them in LeanLaw. Go ahead and go to our settings up top, and then down to the bottom to the QuickBooks section here. Nope, trust accounting. So you see we've already got a couple of them set up here. Normally, if you were starting fresh, you wouldn't see any of these, but the steps are still the same actually. So the first is to add a trust account and then select the appropriate trust bank account. So here we'll select after I refresh the page, got to remember to do that. There we go. So there's that Masterclass trust account that we made. And check for the Masterclass liability. Oh, it's not there. So now's a great opportunity to take a look at what LeanLaw will do if you don't have one. It'll actually create one for you, which is great.
I think you picked the wrong type on the liability account. It actually needs to be trust, but maybe you did that deliberately.
We're going to go with that. Go ahead and click save. And that's now created a new account for us called funds held in trust, the new liability account. If we go back and take a look at QuickBooks, we would see the new account called funds held in trust, set up the correct way. And then the operating account you select down here. Normally, you don't have more than one operating account, at least in the firms that I've worked with. So might be wondering, why do we have a liability account? What's the purpose of that? Well, the bank account doesn't keep a ledger or a list of which client's money you have and in what amount. So that's why LeanLaw uses the funds held in trust liability account to act as a ledger or a fancy spreadsheet of all of the balances and transactions that each of the clients or matters underneath those incur. So it allows us to reference that quickly. Let's see. Oh, that's right. We want to talk about sub-accounts. So real quick here, if we take a look over in QuickBooks and look at one of our existing liability accounts, you'll see it's got kind of a funky structure where it's got sub-accounts and then more sub-accounts and then even more sub-accounts. What's going on there? So the way that the liability account is structured is that each client has its own sub account in the liability. And then if you, depending on the accounting style you have, whether a client accounting or matter accounting, each matter may have its own sub account. And this is important because when we're entering deposits or payments or interacting with trust, LeanLaw needs to know where specifically that's going to be pointed, which we can go ahead and set up now. Looks like Ian's got a question. LeanLaw creates individual sub-accounts in QuickBooks for each client. Yes. Is it okay to deactivate them as we are done with those clients so our chart of accounts isn't gigantic? Fred?
Yes, that is perfectly fine. In fact, we do have on our somewhat large list of things to do to automate this when you archive a matter in LeanLaw. It would be nice if you archive a matter or client in LeanLaw that we also archive it in QuickBooks, including the trust account. We don't currently do that, but it's perfectly fine to do that manually and recommended, actually.
Yep, just make sure that that's zeroed out so we don't have any hidden trust funds. So we're going to set up Master of Classics here, the new client, with trust. So to do that, we'll select their matter and go to the QuickBooks tab here. Now, the first thing we have to do is connect this client and matter to QuickBooks. That can happen automatically if you have there's a certain setting in LeanLaw to do that, or if you make trust deposits or send an invoice, the connecting to QuickBooks piece happens automatically. But I'm going to show the manual side so that you're all familiar with what the actual settings of it look like. So first is to click the QuickBooks connector button. There we go, breeze through that, perfect. And then set up trust accounting at the bottom, right there. Perfect. Now we do have multiple setups, so I'm going to intentionally pick the Masterclass trust. Quick note, opening balance here is not opening AR balance. That is not previous due invoices. That is if you have already tracked the trust deposit in the trust bank account, but need to allocate those funds, that opening balance, to this client. Most of the time, totally not applicable. Go ahead and save changes. Okay, we're now set up and ready to track trust. So, Fred, is it kind of overkill to make so many liability accounts and sub-liability accounts when we could just track it at one level?
Yeah, so this is often, we get a question about this quite often that, hey, my chart of accounts is a huge mess here. I don't like all these sub accounts, but it's actually a key part of ensuring an easy three-way reconciliation process for trust accounting. You can immediately see here in these account balances, which client is represents which amount in the trust account. This is a little more difficult to do if you just tag transactions in QuickBooks. But we have had some requests to do it differently so it doesn't mess up the chart of accounts here. This is the only option to do it, and it's so that you can have you can be confident about the funds tracking in here.
Yep. Exactly.
There was another question here about, when I talked about archiving trust accounts, and there's a question here about reactivating it, whether a trust account can be reactivated. Yes, I mean, you just go into QuickBooks and click right there, include an active, then you see all the old ones, and you can go in and
boots me out
keep
again.
logging you out there.
Yeah, I don't know what's going on. Intuit has a vendetta.
So you can reactivate it there. If it was connected to LeanLaw in the past, it'll still be connected. So you don't have to reconnect it. But anyway, carry on, Chase.
I shall. Just a bit of a pro tip here. If you're ever working through doing your invoicing, doing your billing, tracking trust in and out, and you get an error message from LeanLaw that says, hey, looks like the account has been disconnected or inactivated or archived, or it's no longer there, object missing. That's my favorite and most vague error. You'll want to make sure that you check your QuickBooks customer connection here and the trust account options here. If that little QuickBooks icon is red, probably broken. That means it's been disconnected or moved, or that's why LeanLaw is confused. When that happens, you can click on the name here and go back in and reconnect it. Okay. Now, I did have a bit of a spoiler already with showing multiple trust accounts, but we'll talk about that real quick since it is pertinent. Some firms, depending on where they practice and how they practice, may have multiple trust bank accounts set up. Most frequently, I see this with multiple states if they work in multiple states. You do not need a separate trust bank account for each client you represent. This is the bank account, not the liability accounts that we're keeping separate here. And the steps to add those other trust accounts, trust bank accounts, is the same steps as creating one in the first place. Same dialogue. The only difference is you're now able to set the default option. So when you create something, does it automatically set to that?
There is one limitation in here that we run into sometimes, or some of you run into, which is that one LeanLaw client can only be connected to one trust account. You cannot have two different matters for the same client be connected to different or using different trust accounts. This is quite often a scenario, for example, when you take retainers into one account or escrow into another, like we see here. And some clients you would do both. Unfortunately, you have to split that into two separate clients at the moment. So not ideal, but this is another thing that's on our roadmap, but just as an FYI.
Yep, good point. Yeah, when that happens, you have to go into QuickBooks and split that money out within the chart of accounts. So, all right, since we're here talking about liabilities real quick, I do want to make mention that you could spend all day in QuickBooks looking at this long list of liability accounts, but part of the idea of LeanLaw is to make QuickBooks more accessible to your firm and your firm's workflows. And obviously jumping back and forth all day is pretty time intensive. So to try and combat that, we have the funds held in trust page or tab here in LeanLaw that will show you a full breakdown of all of the liability accounts you have. Let me uncheck myself there. So this is the same information we see over in QuickBooks. We now see this in LeanLaw. We don't have to jump back and forth. And I can actually pop in here to one of these, get an overview of their open AR balance, their open trust balance, and actually even get the transaction report here to see all of their incoming and outgoing transactions, instead of having to go into QuickBooks, find the liability, open it up, and get that same information. So trying to make that more accessible. Okay, 3 last things on the trust accounting page here. We've got the mark checks as print later, undeposited funds, which is a big one, and enable evergreen retainers. Now I'll start from the bottom. The evergreen retainers, real briefly, allows you to set a value that you expect, that you've agreed with the client that they will keep the trust balance at a minimum. Once they go past that, they're expected to refill that. And I believe that shows on the invoice memo, Fred, when they've gone beneath that value, it says, hey, by the way, you need to refill the evergreen retainer by X amount.
That's correct.
Okay. Undeposited funds. This is a fun one. Definitely something you'll want to ask your accountant about, or if you're already an accountant and don't know, asking in your accounting community. I know we get a lot of questions about this. But in short, it allows for, again, speeding up processes that would normally take lots of back and forth repetitive actions. So, and the last here is mark checks as print later. Again, something to simplify workflows. Instead of having to print an individual check every time LeanLaw makes the check in QuickBooks, you can opt to print later and print them in a batch instead of one at a time. Fred, we looking good on the trust account setup?
Yeah, I think I was just make a sort of more general point, zooming out a little bit here. That you sort of need to think of, I want to get across here that trust accounting in LeanLaw is really just a window into QuickBooks. The approach we've taken here is that LeanLaw does not keep track of your trust account. There's nothing in LeanLaw that sort of, records deposits or keeps track of the account balances and so on. We're just really a window into QuickBooks. And this is pretty critical because, as we'll see later, the reconciliation process for trust accounting depends on all these things being up to date and as current as possible as you do deposits and transactions and so on, or you'll have a big mess at the end of the month or year. So the approach we're taking here is that anything you see in LeanLaw is really just a window into QuickBooks. Whenever you see a trust balance in LeanLaw, it comes directly from QuickBooks. We don't keep track of it separately. And this is this is kind of a key philosophy of how we've done this. And there's a question here.
Karen asking the big questions.
Yeah, so is it accurate that LeanLaw will not prevent you from overdrafting a client's IOLTA account? I guess, well, we will see. Maybe we'll get back to this when we go through payments. There's an ability in here to pay invoices through trust funds that Chase will show here in a moment. And you cannot overdraft a trust account through that operation in LeanLaw. You can do things directly in QuickBooks that would cause negative balances for clients, but not from LeanLaw. So you're somewhat protected here.
Yes, which is kind of a major focus of the next section we're gonna jump into here, which is simplifying processes and making it saving you from yourself. I don't know how to say that.
I think that's okay.
Yeah, not overdrafting on accident, putting in safeguards like that. So following that process of setting up, the next thing that I'm thinking I need to do is receiving funds or tracking deposits. There's a couple of places to do that. My favorite is with the quick create up here, there's a deposit to trust button, which jumps you right into the dialog. But if you find yourself on the trust account tab here, you can click the deposit funds button here and open up that spiffy dialog, or you can actually do the same thing if you've clicked into a specific client. There's the same deposit funds, but now it's in green. So when you open up the deposit option, it's going to ask you for a payment method, general information, date, amount, the from, which oftentimes firms will use to capture the check number or the reference number. And then you click record deposit. Now, why does that make that? Why would I do this? Why would I do this in LeanLaw? Well, for the trust accounting, there's a couple of things we have to track on the book side. We need to make sure we increase our liability. We need to make sure those funds hit the trust account. I could click a single button, or I could go into QuickBooks and write the check or the corresponding journal entry. But that means I'm, again, jumping back and forth between the two. Single click of a button, same information, streamlines this process.
Go ahead and make a deposit for the client we just set up.
Sure. Let's go ahead and do the trust deposit.
Just a hands-on event, right? So let's show it.
That's right.
While he's filling this in, I want to make a note about the from and use piece. It seems maybe on the surface kind of trivial. What we do here is we have two fields that you can fill in from, say, it's from a person here. You can start filling that in, Chase, and use. It might be retainer for legal services. Now we will then construct, as you see below, just keep typing, Chase, on the use side. We'll construct the memo for the transaction in QuickBooks based on those two items. Why don't we give you the memo field directly? Well, we essentially are forcing you to put in those two pieces to the memo because it is a requirement for trust. It's a trust requirement in most states to have that very explicitly recorded for trust deposits, the from and the use. So we're like making you put this in, and hopefully that makes sense. So yeah, once you click report deposit here, Chase, maybe have a quick look at what happened in QuickBooks with this deposit. Because that's essentially what we're doing here. We're just really, again, windowing in and creating transactions in QuickBooks.
Right.
You know, as a result of this.
There was a question too that I kind of skipped past. Margot, I'm sorry if I mispronounced that. You asked about the ACH option when you're looking at payment method. This right here. This is actually a list pulled from QuickBooks. So depending on the payment options you have set up in QuickBooks, that's what dictates the list that appears here.
Now it actually, so
oh my
the
goodness.
payment methods for, this is weird how we keep getting locked out here.
I don't know what it's doing, but we'll keep going.
Yeah, the payment methods come from QuickBooks, whatever methods you have set up in the apply. Now, it's a bigger question of how do you enable, receiving ACH transactions or credit card transactions for trust. This is actually a topic we're going to cover next time, and we have a solution with Gravity Payments that we love, that allows you to take trust payments electronically. There's some other ways to do this, but it's a bigger topic to receive trust funds electronically because QuickBooks doesn't support the correct way of doing this out of the box. So that's the that's part of the more expanded answer there.
The teaser there too is we're very likely to have Gravity Legal come on for one of these and actually walk through that process and talk about the proper way to do that and the advantages that they offer with the integration with LeanLaw to speed up that process, to seriously make it just the push of a button and entering the same details as a regular trust deposit, but then a check shows up and you get paid. And it's accounted for in QuickBooks, which who's going to complain about free automation? So this is what that trust deposit looks like over in QuickBooks. There we go. Add funds to this deposit. And we're looking at this over in the liability account. There we go, for this client. So as we make payments and deposits out of here, this list will grow and act as a ledger for all of the activity that we see going on here. Okay, so now that we've got a deposit, let's go ahead and take a look at what a payment is going to look like, and allow me to make a fixed fee here real quick. There we go. We'll have a $700 $700 lunch fixed fee as an example there. Go ahead and set myself as the invoice user, and we'll go ahead and create an invoice for that now. So real quick, going to look at what paying the invoice actually looks like. Go and quickly create that invoice.
So Chase is really just creating a draft real quick with a $700 fixed fee on it, in case
Correct.
you're not following, and sending it all the way to QuickBooks.
Oh my goodness. You must enter the client address. Oh boy. Just catch me on everything today, isn't it? There we go. There's my email if you're quick enough to catch it. And approve and submit. There we go. Off to QuickBooks we go. Okay, so there's a couple of things that are really important to talk about, specific to trust. So if you look up top here, you've got that trust filter. Excellent tool if we want to focus on just invoices that are paid with or that have trust, which we do. So we'll go ahead and set that to with trust. And then the state filter. Now, by default, it's not paid. Usually here to pay invoices. This is now specifically focused and shrunk the view to invoices that I want to look at that I can pay with trust. And wouldn't you know it, there is our item at the very top of the list. That's fantastic. Now we want to go ahead and pay it. Now there's a couple of ways we can do similar to paying it as if it wasn't trust. So we can click the record payment or pay from trust. But I actually want to take a look at it back on that previous list that Fred was talking about, or when Karen asked us about that. If there's overdraft protections, which we can go ahead and do here. So we see that there's an account balance, receivables. And we now see that listed invoice and the ability in green here to record payment, which is going to look suspiciously like the record deposit dialog because it is just as dastardly simple. We enter the amount, the date, and the memo. Now it won't let us overcharge if we try and click record payment. Fred, it does.
Oh, yeah, I think you misunderstood the scenario here. We paid the entire trust account to ourselves here. Now that the client has a positive balance. Correct. If you had put in $1,200, they would not have allowed it. Anyway, I think we're off track a little bit here.
we are, and you're right.
Let's stick to the core use case here and show what a payment looks like, so that it's sort of clear what's happening.
Yes. Once again, watch the login dialog here. There we go. Switch over to the chart of accounts. And there we go. Now notice we did not overdraft this. We just pulled out the entire amount instead of the appropriate amount. But we now see a check.
So let's say this was a mistake, Chase. How do you fix this?
Well, the most appropriate way is to just go in and delete it. We can edit it instead if we wanted to say change the value here and edit it. Usually it's best practice to delete it and start over. Now, when you make a trust payment, not only does it create an item here in the liability account, but it also creates an actual payment in the client's list of transactions, which we would also need to go in and delete. Which, if it decides to cooperate with us, it did.
Yeah, can you go in and delete and undo this entire transaction and redo it with the correct amount so we can look at what's happening? Because I think it can be a little confusing otherwise.
Yes. So we're going to start by deleting that actual payment. Delete, thank you. And that just logged me out again, didn't it? Yep.
There's a question about the sort of accounting piece here. Somebody asked a good question that if we have, and you can just keep going, Chase. If we have a transaction that is a check between the liability account and the trust account, and then we have a payment as well. Wouldn't that take twice the amount out from the client's trust account? And the answer is no. The check moves money out of the trust account, the payment into the operating account, and the payment is against the operating account. The end result, and you should check in your own account, but the end result here is that we reduce the balances of the trust bank account, the trust liability account, and we reduce the balance of the client's, of the AR with the payment made. I might have missed something there, but sorry. Yes, the accounting should be in order here. And in fact, this is especially for trust payments, why you want to use LeanLaw to do this. It's one quick click. So if you just redo this, Chase, without the overpayment.
Yep.
And it's one quick click to pay yourself from the client's trust funds like that, and it creates the right transactions referencing the right accounts. If you do this manually, it's very easy to get it wrong. So one of the reasons to do it from here.
Right.
Karen, thank you. We credit the trust bank account, debit the liability account. and we debit the trust operating account and then credit the client's income account. Whew. Appreciate that.
Fred, if we could get t-shirts that say I heart lawyers and then on the back it says, but I'm not an accountant, I would probably wear that every day.
Yeah, thank you. We need your help from the accounting community to make sense of some of this. So thank you. Chase, I want you to go back to the QuickBooks tab and show how we can, sorry, I mean in LeanLaw.
Oh, you're going to make me log in and out again. There we go. Trust accounting tab.
In the QuickBooks tab here.
Mm-hmm.
So let's go through the options for doing this in bulk every month and
Sure.
the kind of workflow that you might, you know, we can see here how you can take an individual invoice and pay it and, you know, manage all this. At the end of the month, you might have 100 invoices that you need to do this with. And there's a certain workflow that we enable here to simplify all this.
And we do that using the infamous checkbox over here on the left, making sure that we've set the trust filter to with trust and the state to not paid. If we drop down to the bottom, then instead of clicking pay, we click the little arrow here and then pay from trust. It then gives us the option to pick the date for all of those. So allowing that these invoices have trust accounts with enough money to pay them, this will go through and pay all of them with this date. Watch the little cogs spin. There we go. And it gives us a notice at the bottom, 5 were processed, but 3 invoices failed. And if we hover over the little item, little road hazard sign, it tells us why. Which is,
we have it's a demo account with some negative trust balances.
Yeah, not likely to happen in your account, thankfully.
And Chase, will you talk about the trust attachment and the work and how that enters into this workflow?
Right. So oftentimes you want to do this before, what is it, after sending? That you do the trust statement?
First talk about what the trust attachment is.
Sure. So at the bottom here, there's the attached trust statement, which is a list of all of the transactions in and out of the account, meant to, you know, you add it to an invoice to communicate to the client, hey, this is what's been happening with your trust account. We received 1,000, we spent 700, so on and so forth. So, and you typically, I believe, Fred, you want to attach the trust statement before you pay it. Right?
Yeah, the normal workflow here is that you review and submit your invoices to QuickBooks.
Mm-hmm.
If you want to use the trust statement feature, which is great because it gives a client like a detailed ledger of what's happening in their trust account as opposed to just a balance. You go through and attach all the sorry, I got the order wrong. Sorry. You want to attach the trust statement after you pay all the invoices from trust. So the sequence of your workflow should be, you know, create the invoices in QuickBooks, pay them all from trust, attach the trust statement, which will now include that transaction you just made, and then send the invoice to the client. So this way here, you will more or less fully automate the process of paying yourself from the trust account and communicating it to the client. Your workflow can vary. These are just really kind of tools in a toolbox that can be used to string together your own workflow, but that's sort of a typical approach.
Mm-hmm. And the suggested workflow is to make this process as easy as possible, whether it's one at a time or in bulk.
Right.
By recording your deposit first in LeanLaw, your payment, or recording the deposit, submitting the invoice with the trust statement, and then paying it, you're jumping past as many situations, you're skipping many situations that might be confusing or lead to incorrect accounting if you're doing all of those in QuickBooks.
There's a few questions here. One, just on this note here, Khalid points out that you should send the invoice to the client before they draw the money. Well, this is probably true in most cases, but there are some. It depends on your client arrangement. That depends, I think. But yeah, this is why it's really just tools in the toolbox, and you have to figure out your own workflow. But thanks for that comment. And then we have a question about, can I delete things directly in LeanLaw? And I'm assuming you're talking about the undoing the transaction that Chase just did. So if you do a deposit or payment and you make a mistake, can you undo it from LeanLaw? And the answer is no, but this is pretty high on our list to help you with, because especially for the payment, because there's two transactions, it's quite hard to undo, or it's easy to forget one of those transactions when you undo it. So high on our list to help you with. Okay, I might have been wrong here. Khalid responds that it's required by law and the bar to notify the client before you draw funds. So I might be wrong here. So I want to be very careful. So I feel we're being a bit loose here, and I want to make sure you do your own due diligence. So thank you for that note. Chase, there's a question about customizing the trust statement for clients. Now, there's the trust statement that we were just talking about, the attachment that we make using the attach trust statement function. That one you cannot customize. It basically is what it is. But there's also a summary in the memo field that you were just showing. If we can look at that invoice again, Chase. Down there in the memo field, we do a trust summary, and that can be customized.
I will open that up in QuickBooks real quick so we can take a look at that. There we go. So as Fred was saying, there's the memo field, and then as a separate attachment, it would appear here, which this one says it has it, but it actually doesn't. And like Fred said, that the formatting for that is dictated by QuickBooks.
Can you show how the memo field is customized, Chase?
Yeah, absolutely. I did forget that and skipped over it. So if we go back to our settings and look at our trust accounting settings, there's an option here for the invoiced trust notice, and we can actually customize that. Now, it does get a little code-y. You'll notice that on the right here, there's these curly brackets with different values, but those are the specific data points or variables for each client's trust balance. So you're able to customize whether let's say I don't want any of this information. I don't want them to see the previous account balance. No, not happening. Once you make those changes, you'd click Save Changes at the bottom, and all future invoices with trust memos would follow that format you set.
So it looks nice and simple, this page. So I think we're running a little low on time, Chase. Yes. This is so exciting that we just can keep talking all day. There were a few other comments about the question of whether you need to notify clients before you draw trust funds. We are getting conflicting remarks from this is something that gets you guys going. I love it. I think the answer is it depends. You should do your own due diligence here is the short answer, but it sounds like some of you actually have processes along the lines of what I was initially saying, where you can draw funds from the trust account without notifying clients first. Okay. Now, Chase, because we're a little low on time, I suggest that there's a lot more questions here, but we're gonna have to do them offline here. I want to make sure we just at least briefly show the reporting section here before we wrap up.
Yep. So we'll jump right to that. We'll do reports up top here on the right, and then down here at the bottom, where'd it go? Trust report. There we go. Go ahead and open that up. Give that a second to load up, and there we go. Okay, great. So this is a report, go figure, of the ongoing liability accounts, their balances, with a couple extra goodies in here. So you'll notice responsible, evergreen, trust balance, trust account. Great. Starts to get interesting here towards the end with the ready to bill option. So that's the amount that they have sitting in WIP that hasn't been invoiced yet. And then we've got the trust to WIP ratio. So we know with this first option here, Coastal Motors, we are 13%, or the trust account accommodates 13% of the current WIP. So I know probably should request more funds from Coastal Motors before invoicing them. And then last is the account balance. So this gives you an excellent insight into how much you're actually covered, or, you know, are you going to be able to pay the invoices or pay the WIP that's currently listed with the existing trust funds.
I mean, this is a bigger topic, but we have some clients that have been very successful using retainers in improving collections significantly. Like I think one firm that I talked to went from late 70s, like 78% realization rate, so in their collections, to over 90% by just making sure you had retainers from all clients that covered the work you started to do before you do it. So there's sort of some tools here that kind of raises questions about the business model of your firm, and also for individual clients. This is sort of a bigger topic, but hopefully it can inspire you to look at some of those options.
Yes, absolutely. All right, Fred, let's chat new features. We've got, you guys have been busy and we've been away for quite a few months. What's changed in the product?
Yes, I mean, I do want to, there is a question, and we did actually have it on the agenda as well, the topic of three-way trust reconciliation. And maybe we should make a separate video about this and follow up here. But just very briefly, if you go to the billing trust tab, Chase.
Yep.
I mean, I probably will get this wrong since I only have 10 seconds here, but essentially those three numbers you see for each account is kind of the three parts of your reconciliation: the bank balance, the liability balance, and then the totaling up of all the client balances. Ideally, all those numbers should match, but that's sort of the very short answer. It's a little more complicated than that, but I think sort of our message here is that by using QuickBooks the way we use QuickBooks, and that I keep calling it like it kind of we're just a window into it. It's much more likely that your reconciliation will be unproblematic, because we don't have two systems keeping track of things. We only have one. So there's the kind of short answer, but we will follow up, and feel free if we don't do this in a timely manner and you need this more urgently to reach out. Okay, sorry for the time management here, but I'm going to pop in and take over, Chase, your screen.
Go right ahead.
And then move to, let's see, let's make sure it's the right screen. There we go. So here's my my demo QuickBooks account.
Fred, if you could zoom in just a bit.
Okay. Oops, sorry.
There we go, much better.
So I was going to talk about two things. One is some invoice, draft invoice editing functions that we have released and are releasing, that is going to make basically the monthly invoice review process easier, we hope. When you have a draft invoice like this one here, you will now notice little checkboxes next to line items and little dots next to them as well. These weren't there about a month ago. There are three functions available You can make an item non-billable. You can write it down to 0, or you can save it for later. Making something non-billable is just a question of setting the rate to 0, basically. Writing down to 0 is we keep it amounts to the same thing. We reduce the number of hours to 0, but keep track of the original hours behind the scenes so that you can report on the original hours for productivity purposes. So that's the write down to 0. Save for later is basically taking this item off the invoice and putting it back in ready to bill. It's like, wait, this shouldn't be here. Save for later, and it just goes away, and it goes back into the ready for billing pool. So you could do this before by going into these items and like adjust write downs, and you can use the remove button and then use save for later, or there's all these functions were already there. They were just kind of hard to get to. So now you have little shortcuts over here. You also can do this in bulk.
Yes.
Basically say, I want to take all of these things, and now you see these buttons up here light up. They're also at the bottom down here if you're further down the invoice. Might have to scroll up and down to find them. And so you can just like click on a section and say save for later, and that whole section goes away. Or multiple items and sections. So hopefully this will make invoice editing a lot easier.
Mm-hmm.
None of these changes will actually happen until you click save. So you can goof around in here and nothing will actually happen until you save. So hopefully that's useful. Now we are just about to release one more function in there. So if I click into this invoice again, you see now I have an extra button here in my little test account. So what this does is it's the same as save for later, but I'm pulling this item off the invoice, but I'm putting it on another matter. So quite often we run into the issues like, oh wait, this shouldn't have been charged to this client. This is wrong. It's completely the wrong client or matter. And we move it off this invoice, assign it to a different matter, and say save for later. Now we're not able at the moment to move it onto another invoice for that matter, which would be nice in many cases. But this is the first step, so we're getting there. At least you can save this invoice. That item is now back in ready to bill. Now, if you do need to pull it onto a draft that's already created for that matter, I lost track of which matter it was, but you will have to currently undo that draft and then redo it so that that new item gets picked up by the draft invoice. We are working next on making that easy as well, so that you can move items more between invoices, and maybe also move things on ready to bill directly onto the draft invoices that are already created. So hopefully hopefully this will be helpful for you. We have lots more to do here, but let us know what else you're missing in here. Maybe you're frustrated that you go through and you always do the same thing on certain invoices. We can add that to the shortcut menu or to this bulk function. Let us know what you need, and we'll hopefully be able to do it. All right, just looking at the clock, sorry. So that was the one thing. The next thing, it's a little complicated, so I'm just going to shed some light on it. Put a spotlight on, hey, something happened here in this area. You might or might not be familiar with our distribution feature. What it does is it allows you to take a collection of payments Typically, more or less, the payments made in a month is typically how this is used. And then create a collection for those payments called the distribution. So in this case here, I might call this my January distribution, because I will distribute this to my attorneys, the collections from December. Now this feature is used over in our compensation area of reporting, and I can pick my distribution over here, and now I see the originations and all these things that happen here. These originations in this report here depends on a bunch of settings in the report section of LeanLaw. For example, the origination share. And if I change this, it'll change the report. What we did was we updated the product so that distributions that are in the to distribute or distributed state. Huh, why am I painting now? That's weird. They lock in your distribution settings. So as soon as you move something to distribute or distributed, it will use the settings at this point in time. And if you in the future change your percentages, or you might change who's responsible or originating for a client or a matter because an attorney took over something from another attorney. Now, all those distribution reports are still using the old numbers, and these numbers are used for anything going forward. So long story here. For a lot of you, this is probably confusing because you might not be familiar with the distribution feature and the compensation reports. But if it sounds interesting, there's some other master classes where we've covered this, and there's also some excellent documentation about this feature and this feature set on our site.
Which is exactly why I posted it in chat.
Okay, this is posted in chat. You can always go to documentation from the little question mark up here, pick documentation. And if I am confused about distribution, for example, there's a nice article here. And of course, we're also available on our chat button down here if you need help. Lots of other little things have happened in the product that I'm not going to cover here. If you go to the support site and go to product announcements, for December, this article here will show you, the bulk invoice editing I covered, and then there's some little things in here that you can maybe it's relevant for you or maybe not. So that's all I had. We're sort of right at the end of the hour. Sorry feel our time management was a little off, but I appreciated your engagement. There was especially some excellent back and forth here on the whole when to pay when to send an invoice to a client and when to take their money. That's a
hot topic.
A hot topic, apparently. Chase, do you have anything to close with? Or
I don't. Nothing in particular. Just wanted to thank you all for showing up and joining us every month for these. Fred and I definitely look forward to hosting these and having that interaction with all of you. So thank you.
All right. Thank you. Have a good one.